Hello and welcome back to our Brighter Minds Tuesday meeting. In today's meeting, we'll discuss about the latest developments of the equity market across the world, across particularly US markets and Indian markets. So, uh, uh, Basically, as the flow we have, जिस तरीके से हम अपनी flow को रखते हैं, so we'll continue with that. We will start with the global markets, and then we will talk about the Indian markets, and then we will talk about uh, the industries and stocks which are in limelights and what is the outlook for that. So let's wait for a few minutes so that everybody will join and most more people will mm, join to view this discussion. So let's wait for a few minutes and we will start then. So let's start the Tuesday meeting and we'll go by the obviously discussed way we discussed. So first we will start with the global market. So particularly with the US markets and US economy. So in US, we have seen that on Friday, Fed Chairman Powell has said that the rates will stay longer than anticipated. So basically, they said that the soft landing is a distant dream as of now. So basically, market was anticipating some soft comments, some dovish comment from Fed Chairman Powell, but the hawkish comment has somewhat unsettled the market. The, it has indicated that the 75 bips rate hike is on the cards in the September meeting, and particularly uh, the, if we see by the Fed fund rate watch, we can see that the probability has jumped sharply from 50% level to the 70% level as on date. So basically, market is you know not anticipating a 75 bips hike. It is still a few probability assigned to 50 bips hike, but the Fed comment has indicated toward that the things will not slow down on rate hikes path. So basically, that is the worry for the global market, that the soft landing that uh, everybody was anticipating is something in danger. So basically, that means that U.S. market is more likely, U.S. economy is more likely to going into the recession. And as we see by the historical trends, in every recession, the earnings of the companies has slowed down significantly. And if we see by the past recessions in US, we'll see that the EPS median EPS growth cut around 18%. So basically, there is earning compression, and we have so far seen that P compression in the recent falls. But earning is also in danger, and so basically 18% is the median. So we'll see in this if there is a possibility of any kind of recession, how much earning get compressed, and in that sense, what is the valuation for the US equity market in that context. So basically, that is the fear of the market, and that is rattling the global markets. Uh, if we see by other, Atlanta Fed president comments, they think that bips to 125 bips rate hike is needed, and till this year ends, and stay longer there for uh, for a while, so that the inflation get killed. So in that sense, the hockey's comment from most of the Fed presidents and Fed chairman has, you know, hanged over the market and unsettled the global markets. Uh, if you look about the U.S. economy indicators, as Powell has said that the September hike will obviously depends on the data. So if we see the data from U.S. economy, so labor market is still very healthy, and job additions has been uh, you know not slowed down, obviously, compared to the uh, past datas. But the real pain is into the U.S. housing markets. Basically, housing inventories has risen to a significant levels that has seen in 2007, 8, 9 levels. So basically, there is more pain in U.S. housing market, and might be there is some pain a spillover to other other sectors, other asset classes also. So that is all about the US economy. And if we go to the other economy like China and European unions, why? Because India, these are the largest trade partners of the India. So any slowdown in these economies will impact India's growth, particularly on export side. So so if we go to EU, uh, if you look at EU, things are not very rosy there. And energy crisis is still there, and energy prices should so to the levels are not seen in many years, in particularly in Germany and France. So basically, the problem is still there in Europe. Many plants and many industries are shutting down their plants, although temporary basis. And obviously, we all know that winter is coming in Europe, and that will accentuate the pain of the energy for the European nations. So basically, there is demand destruction for Indian companies. Those are dependent on European nations, and they gather significant revenue from the European nations. So in China, we have also seen that China is struggling with its economic growth. So they are cutting down on rates. They are stimulating their economy by giving stimulus packages and injecting liquidity into their economy. But basically, they are suffering with the growth pain. So overall, the global macro is not very healthy. Obviously, a few days back, it was looking as the peak pain has been achieved, but we think that peak pain is very difficult to say that we are at the peak or not in pain sense. And so basically, if you look at the major trading partners of India, they are going through the slowdown phase. So if we look at Indian economy as a whole, so India's development has been quite good. I mean, the economy is robust. The numbers that are coming up on the economic front are very healthy. Uh, any high frequency indicator we see that is pointing towards the growth in Indian economy, whether it's credit growth. We have seen that 15% level a few days back on banks credit, but major worry for India is currency, where which is we all saw yesterday that it hit 80 level, and obviously there is anticipation of 81 level, because foreign outflow is not very very high in compared to the July month, compared to the June month. But obviously things are getting worse in US and UK economy, from where the most FII come to invest in India. So basically, there is no relief on that front, and RBI is intervening into the market on a regular basis to stabilize the currency. So that is the major worry, and we have seen that there is recent rebounds in commodity prices also. We from we saw that the commodities prices has jump from the low levels. We have seen that crude is still above 100 level and currently trading around $104 per barrel. So basically, uh, earning is somewhat somewhat confusing, or you can say unpredictable for Q2. And we have seen in Q1 that earnings has been Indian companies earnings has been sequentially grown by 1% on revenue side, but there is significant margin compression in Indian companies at around 2.13%, and obviously profit is down significantly from last quarter. So pain is likely to stay here for on earning terms for Indian company in Q2 also. But Q3 is likely to be good. I mean, in that sense, because we are going into the festive season, and obviously that will, you know, uh, help the companies earning in terms of revenue and margins. Softening of staying of energy prices where it is uh, somewhat manageable if it does not accelerate further. So things are normal for India. Growth in Indian economy is healthy and robust, and companies those have pricing power has already started passing the prices to their clients, their customers, and taking little hit on their margins. So if we see if there is further softening from this elevated level of ener- uh, commodities prices, surely get some earning improvements. But there is serious threat to the earnings of Indian companies in Q2. So tomorrow we will going to have Q1 FY23 GDP data, and obviously the street is expecting GDP growth of in the range of 13% to 17%. But obviously the median range of the expectation of Q1 GDP growth is around 15% from the lower base that we saw last year when we were going through COVID second wave. So is all about the Indian economy, and if we look up about the companies and the major heavyweights in the indices, so Reliance has yesterday had their AGM, and they discussed about their future plans and succession plans. And obviously, Reliance is going very aggressive on their investments. They are investing around 2 lakh crore into the 5G, and they are hopeful of launching it across the India until December 2023. So that is uh, from Reliance, and obviously they have uh, Reliance chairman Mukesh Ambani has given major roles to uh, Isha Ambani and Akash Ambani to Reliance in Reliance Jio and Reliance Retail. So that is kind of signaling to the market that the succession plan is on the way. So in that sense, we see that there is large requirement of investments in 5G, particularly those companies who are you know uh, aligned towards 5G capex are going to benefit from this wave of 5G launches from major telecom companies in India. We will see some improvements in other sectors like banking, because loan growth is very high, and banking is a very heavy weight and in indices. Banking and financial services are heavyweights in the indices, and banking has obviously performed well in Q1 also. So these companies are going to impact the earnings of Nifty, and obviously in that will reflect into the P. So this is all from for Tuesday meeting. So we'll meet next Tuesday also and discuss about the latest developments of the global markets, Indian markets, and the outlook ahead. So thank you for watching, and see you on next Tuesday. Thank you.